Hey, welcome. It's Walter here from FX Jake, and if you haven't seen it on the forum, the trading forum, there's a great thread here. I think it was started by Aristides, but I'm not sure. Yeah, it sure was. This is just brilliant, and if you're not thinking about money management, then you're probably looking. And this isn't meant to be mean. But if you're not thinking about money management, you're probably still looking for a trading system, which is fine. It just means you're at a different stage. But if you found a trading system you like, then you're probably going to get deep into this stuff, because this is where the real gains are made by most traders. And it's adjusting and thinking about your money management. So what Aristides is talking about here is this idea that based on the win rate of your system, you're going to see streaks. And the probability of your streaks are going to be based on the win rate. So in other words, a higher win rate system is unlikely to have, if you have a 90% win rate system, you're unlikely to have 50 losing trades in a row, 20 losing trades in a row. If, however, you have a 30% win rate or a 40% win rate, then you're almost guaranteed to have long streaks of losing trades. And there's a great discussion in here, and by the time you watch this video, it may have even been more than this, but there are some really good posts on here. And what I want to call your attention to is this chart here that Aristides has posted. But I also have posted a link here, and if you click on the link, you'll get to this page right here. So let me show you how this calculator works. You may have seen it before. I've talked about it before, but I think that because we now have a thread all about this idea, it's probably a good place for a reminder on this. Now, number one, what is the loss probability? So let's say I have a 40% win rate trading system, which for some trend following type systems is not uncommon. If I have a 40% win rate, that means my loss probability is 60%. Now, I want to know how likely is it that I'm going to have 10 losing trades in a row, okay, given that I have a 60% chance of a loss. And the last part of the equation is how many trades am I looking at here. You can see if I'm only looking at 50 trades, the probability of having 10 in a row isn't really that high. It's like almost 10%, 9.965%. Okay? Now, as soon as I go to 100 trades, that jumps up quite a bit. Remember, we're talking about 9.9%. Now it's all the way to almost to 21%. It's 20.4% probability of having 10 losing trades in a row if I have a 40% win rate and a 60% loss rate. All right. Now, what's interesting is that if you bump this up, and now I'm looking at over 1,000 trades, again, same question. If I have a 40% win rate, which means 60% of my trades are losers, what's the probability that I'm going to have a 10 streak of losers, 10 losing trades in a row? You're going to see this number completely jump up to 91%. It's almost certain. I'm almost certain to have 10 losing trades in a row if I trade this system over 1,000 trades. So what does this all mean? Well, it means exactly what Aristides is talking about in here, which means if you have a system where you're not winning a lot and yet you have really big reward to risk ratio, and that's often the case, right? Well, if it's not, then you better stop trading the system. If you have a 40% win rate system, your winners better be awfully big, otherwise you're not going to make any money. But let's just assume that we're making money with this system. It has a positive expectancy. Well, guess what? You should be emotionally prepared for when it happens, so you'll have the strength to drive through it. This is exactly what I like to talk about, and this is really good that I'm seeing this in the forum, because it means that other people are obviously rolling this around in their heads and trying to come to grips with this idea, because it really means gets to the heart at, are you going to succeed as a trader? Have you figured out what your streaks are going to be? So let's say I have a 70% win rate system, which means I have 30% probability of losers. Okay, now over 100 trades, how many of those trades are going to be, how likely am I going to get 10 losing trades in a row? Almost none. Not even a 0.5% over 100 trades. It's very unlikely that I'm going to get 10 losers in a row. However, bump it up to 1,000 trades, And now we're talking about a 0.5%, so it goes up. What about if I'm trading over decades and I've got 10,000 trades under my belt? Well, now I've got a 4% risk of having 10 losing trades in a row. Well, what if I bump that down and I say, well, what if I have just 4 losing trades in a row? All of a sudden, I'm guaranteed over 10,000 trades, even though 70% of my trades are winners. I'm virtually guaranteed that I'm going to see 4 losing trades in a row. So this is something to think about. I would encourage you to go over, take a look at this thread on the forum. It's actually called, what's it called? In favor of higher reward to risk ratio. It's a great thread to check out, and post your questions and your thoughts, because I'm going to be following this thread quite closely. I think that Aristides is really onto something here, because other traders who aren't thinking about this certainly should, and that's why I encourage you to look for, I mean, this spreadsheet's great, but I think the calculator is even better, because you can just simply, plug it in there, plug your numbers into the calculator and see where you're at and what's likely. I mean, this is great if you're back testing a system, right? And you haven't even gone live. You're back testing a system and you go, well, it's got a 50% win rate, okay? And I'm concerned. If I have 10 losing trades in a row, what's the likely, if I have 10 losing trades in a row, I might get a little bit upset with this trading system. So if I have a 50-50 win rate, 50 wins, 50% of win, 50% loss, and I take 100 trades, I only have a 4.4% chance of having 10 trades in a row. However, as soon as I go to 100 trades, it jumps up and I have a 38% chance, which is a pretty good shot, better than 1 in 3. And now after 2,000 trades, guess what? After 2,000 trades, I have a pretty good shot. I've got almost 2/3 of a chance of getting 10 losing trades in a row. So if I have a 50% win rate, and I've tested this in Forex Tester, what that means is I have to be ready for 10 losing trades in a row, and I've got to be able to withstand that, knowing that I got to stay away from looking at what's talking about here is, here's Aristides. He's saying right here. Here we go. The key seems to be to deassociate small number recent results, like your last 10 trades. That is absolutely the key. There's no doubt about it. Because, and actually, if you don't believe me, check this out. Look up on the internet. Go ahead and Google recency effect. Here, I haven't done this. I just thought of this right now. But this is a psychology. Well, serial position effect. It's similar, but here we go. Recency effect defined. This is the principle that the most recently presented items or experiences will be likely remembered the best. If you hear a long list of words, it's more likely that you will remember the words you heard last at the end of the list than the words that occurred in the middle. This is the recency effect. You should also note that you'll be likely to remember the words in the beginning. This is called a primacy effect. So the most powerful effect is the recency, the things that have happened most recent. Then the primacy, the things that happen first. And then in the middle, those are the things that are often forgotten. And what does that have to do with this? It has everything to do with this. What Aristides is saying is that the key seems to be to deassociate small number recent results. In other words, your last 10 trades. And this is where most traders go wrong. Most traders will take the last 10 trades and they will completely change their trading based on the last 10 trades. So because they had 10 losers in a row, they'll add a new rule to their system. Or they'll say, I won't take trades if the market is in this sort of situation or whatever. I will have a new filter, whatever. That's the type of thing that people do all the time, and I think it's really dangerous. The important thing is take a long-term point of view. Just like a casino doesn't get upset when somebody hits, a $12 million jackpot in the slot machine, because they take the long view, which is they're going to be pulling in a very small percentage of the money that flows through those slot machines. So they're not worried if in a particular day they actually lose money, because over the long haul they know they're going to make money. So that's just something to think about. So I wish you happy trading, and we'll see you in the next video. Take care. Bye.